Hi guys, welcome to Amplify Trading's S&P trading simulation. The structure of this simulation is going to be as follows. For the first 4 minutes or so, you're going to have our head of trading, Piers Curran, talking about the market activity and the market environment within which you're trading. Okay, predominantly the chart being shown will be the E-mini S&P. Okay, the S&P 500. So stocks within this index, such as General Motors, Goldman Sachs, McDonald's, Johnson & Johnson, General Electric, Microsoft, Google, pretty much any US firm you can think of. The prices of all these individual companies are grouped together to form an index, which is what we're looking at now. So the head of trading is going to take you back through some recent market activity, very important during this period. Please take some notes. Please listen carefully to what he's saying, as it will help you as you go through the trading session. Okay, I will now let him begin.
21st of January. Let's check out these markets, and really another phenomenal day on the markets yesterday. What is forming into an amazing range that this market cannot get away from, and it's a huge range at that. So yesterday, the 20th, we had a big sell-off, especially into the sort of first part of the afternoon session, steep decline on high volume, which took us ultimately from the top side of our medium-term range, up at 1147, right down to the bottom side, and we've got a batch of sort of long-term support levels in and down around this area, 1126, 1125, that I'm going to talk about in a minute. But before, today's session, the one we've got coming up, it's going to be all about the Goldman Sachs numbers, okay? So we're going to be expecting the Q4 earnings for Goldman Sachs. That's the main event for today's market action, I would say. This is hot off the heels of the Q4 earnings from a lot of the other banking sector big guns yesterday, Bank of America, Morgan Stanley, Wells Fargo, all coming out with, in different ways, reasonably encouraging statistics for their Q4. I just want to talk about this medium-term range before I go any further, because it's very important. I just want to look at the hourly chart here. Let me bring that up. So here we're looking back to the 5th of January. Okay, so the 5th of January right through to today, the 21st, and this market has been in a sideways range, and it's been quite an unstable range, in that the middle of the range we seem to be moving across it very rapidly with huge accelerated moves on high volume, and then spending a bit of time hanging around the top and the bottom of the range. So my range is from, on the top side, 1147, 1148, which are the 15-month highs. That's over a 70% move higher off March 2009 lows. And then the bottom side of this range, which we've hit maybe 1, 2, 3, 4, 5, 6, 7, 8 times. So, we could go either way here. It's finely balanced going into today's session.
Okay guys, so here we are. This is the S&P chart, 2-minute candles, so each candle represents 2 minutes. Okay, trade number 1. The time is 1 o'clock, the price is 1136.00. It's 1 o'clock and the much anticipated Goldman Sachs numbers come out. All morning, as Piers was saying in the briefing, we've been hearing whispers of $5.12 versus $5.18 expected. The results come out. Goldman Sachs Q4 earnings per share 8.2 versus expected 5.18, a huge beat for Goldman Sachs numbers. Goldman Sachs says compensation and benefits are down 20%, however, versus 2007. So this is the lowest ever compensation ratio. Compensation and benefits to revenue at 35.8%. Have a look at where we're trading now. Okay, stellar beat by Goldman Sachs. You've got 60 seconds. The price trading is 1136. Would you like to? Okay, so you can see here initially, on these stellar results, the S&P pushes higher. It breaks through the morning's range, and we just start to drift lower slightly, 1134.75. So for trade number 2, we're trading 1134.75, just slightly down on the first price, trade number 1. So we've pushed higher, and now we've recovered, and we're now trading back just below where we were. Okay, here we are, trade number 2. Trade number 2, the time is 1:18, and the price, as I've discussed, is 1135.25. So After the results, we've seen a price spike in both directions. Goldman Sachs shares, however, are up 1.4% in pre-market trading. Having analysed the results and seen the market reaction in the short term, do you want to adjust your S&P position? Would you like to trade at this price, 1135.25? Would you like to trade at this price? Would you like to trade? Okay guys, so let's have a look and see how the market reacted after. That's 1:18, so really 20 minutes after the Goldman Sachs results came out. And we just pushed slightly higher really, so we're back trading now at 11:35, okay, and the time is 1:30. And the reason why I'm giving you another opportunity to adjust your position in the S&P now is at 1:30 we have initial jobless claims coming out at 1:30. Okay, this is how many people require jobless benefit for the week in the US. Okay, so for the United States, what is the change in support levels for those out of work? So the higher the number, the more negative it is for economic growth, and presumably therefore the more negative it might be for the valuation of these equities. Okay, it's 1:30 and the numbers come out. Initial jobless claims, week on week, 482,000 versus expected 440. Much higher, okay? Many more people here requiring support because they're out of work, okay? This is not good news for the US economy. However, there's also a comment attached to this data that says, claims jump is administrative, not economic. Claims jump is administrative, not economic. Okay, the market's currently trading at 11:35. Have a look at the market, have a look at where we are within the day's range. This is trade number 3, the time is 1:30, bad jobless data for the US, 60 seconds, would you like to trade? Okay, so hopefully your trades are in on that decision, and let's have a look and see how the S&P then reacted to that negative jobless data. And as you would expect, the equity price is coming under pressure, and we move right down to the low of the day's range. So here you can see we've had support all throughout the day's session. We're just coming down to test those prices again. Okay, we're just coming down to test those prices again as we come for trade number 4. Okay, trade number 4, it's now 1:40, so 40 minutes after these Goldman Sachs numbers, and the higher than expected jobless claims has pushed us lower down to the low of the day's range. So we're finding some support around 11:31. Okay, is it time now to book your profits if you did manage to enter short on that initial jobless claims data? Or is it time to let your positions run and extend your profits to the downside? Okay, so the market price is 1131.75. 1131.75. Have a look at the chart. We're down on the morning's low. Bad jobless data has pushed us down to this level. We've got technical support. 60 seconds, guys. Would you like? Okay, so hope your trades are in for trade number 4 as we move into trade number 5. Let's see how the market reacted, how the market performed after reaching those technical lows. Well, remember when the jobless claims number came out? Very importantly, it was a bad number, but it came with a sentence saying this jump in claims is administrative. The jump in claims is administrative, which means actually, even though it's a bad number, it was a bad number due to the way in which they recorded the numbers rather than actually necessarily poor economic data. So here we are, we've come right back up, bouncing right off the bottom of the day's range to come back up and test the high of the day's range. Okay, so the initial knee-jerk reaction lower, then traders and investors think, hang on a minute, this was just administrative. Number 5, the time is 2:38, the price trading is 1137.25. 1137.25. It's 2:38. Another one of Will's emails hits an inbox, this time from an unknown analyst, and you know, all throughout the day it's important to keep up with the research, the news, the market whispers. And this reporter is looking at Goldman Sachs, what would their earnings per share look like if they paid the same compensation levels in quarter 4 as they did in quarter 3. Okay, so if you go back to the Goldman Sachs numbers initially, they were stellar, they were standout earnings per share. However, it was also reported that these were the lowest Goldman Sachs paid their employees, the lowest level of bonuses in relationship to profitability as ever recorded. Okay, so what would have their earnings per share looked like if they actually paid Q3 bonuses on par with Q4 bonuses on par with how they paid their staff in Q3? Now, it's pretty clear that Goldman's amazing beat was due to the lack of bonuses, not due to the performance of the firm. Okay, so to get a clearer view of the earnings, I tried to see what would happen if they occurred the same amount in Q4 as they did with Q3 bonuses, and actually they would have missed their earnings per share number. So instead of the 8.2 recorded, they would have had an earnings per share of only 4.06. Okay, so instead of the 8.2, their actual earnings per share, if they had paid their staff at the same rate, at the same levels in Q4 as they had done in Q3, it would have been 4.06. So you guys got to think, is this market moving, or is it just another one of the numerous emails that Will sends out from investment banks? The market price is 1137.20. Have a look at the chart, have a look at the levels where we're trading. We're right at the high of the day, 1137.25. You've got 60 seconds based on that research, based on the analysis there of Goldman Sachs's earnings per shares figures. Would you like? Okay, so let's have a look and see how the market reacted. Well, we pushed through that 1137.50. We just squeezed through slightly. And then, you know, this range is very much in place now, the high and the low of the day, very much in place as we come up to trade number 6. And here we go, trade number 6. The time is 2:45. The price is 1134.50. So it's now 2:45. We've moved down to 1134.50, so it really paid off if you did adjust your position, adjust your exposure based on that research email that we sent out. Okay, the price trading is now 1134.50. 1134.50. Take a look at the chart. See where we are within the day's range. I'm going to give you a chance here. The time is 2:45. Would you like to go long? Would you like to go short? Do you need to adjust your position? You have 60 seconds now, guys. Would you like to trade? Okay, so let's have a look at how the market's playing after that trade number 6. We're just coming up to 3 o'clock, and the S&P's been really trapped within this day's range so far. We've been unable to break the upside, unable to break the downside, but there is a lot going on. However, now we're coming up to 3 o'clock, and we have really the main data of the day. Okay, this is what the market's been waiting for. The market hasn't been able, perhaps, to get out of this tight, congested range until we see this data. So here we come to trade number 7. 3 o'clock, and more economic data is set to come out of the US, and this time it's in the form of US Philadelphia Fed and US leading indicators. US Philadelphia Fed for the month of January, month on month, 15.2 versus expected 18.4, lower than expected. US leading indicators for December, 1.1% versus 0.7%, so higher, better economic data that's been expected. So, mixed results here, guys, and have a look back at the chart. We've been stuck within this range from 1138.50 to 1130.75 all day. We've got mixed data here now. We're just in the top quarter of this daily range, and the market price is 1134. Now that this data's out the way, now that we've sidestepped this data, perhaps we might get some more flow, some more fluidity in the market. The time is 3 o'clock. Your next trading opportunity will be in 25 minutes at 3:25. Have a look at the chart. Think about what exposure you have on at the moment. Would you like to trade? Okay, hopefully all your trades are in. That was your 7th trade. Let's scroll down now and see what happens here in the E-mini S&P. Whoa, okay, so a huge sell-off there. A big sell-off and a technical break. So a technical break going below 1130.75. We've broken the day's low here. We've moved below this day's range that's been really set in stone. And we're now trading 1127.25. Really firm selling after that mixed data. So the selling not really as a result of the data, but the selling as a result of the data getting out the way. And if you have a look at the longer term chart here, guys, this is I've now changed this S&P chart to a 240-minute continuation, so we're seeing all the way back till the start of the year. You can see now we're testing Not only is this the day's support, but this has been the support all month. This has been a key level of support all month in the S&P. Okay, 1120.75. We're testing the key level of support that we've seen all month. You can see how strong that's been, really since the start of the year. Okay, so we're at these levels, guys, as we come up to trade number 8. Big sell-off. We've moved outside the day's range, so there's the day's support being broken, and we're now testing the year support. Okay, the year low. Trade number 8. The time is now 3:25. The price at which you can trade is 1127.25. Okay, it's 3:25 and we've seen a strong move lower, and we're now testing our layer of hugely significant support. Okay, at 11:27, that was the low on the 6th, 7th, 12th and 15th of January. And just below where we're trading, 11:25, that was the low on the 5th of January. So if you think about that longer term chart I was showing just briefly, this is a very important level of support here in the S&P. Have a look at the chart. Think about what the market's doing here and how the market's moving. You've got 60 seconds to adjust your position, to adjust your exposure. Would you like to trade? Okay guys, so let's have a look at how the market reacted then after that really significant sell-off, breaking the lows here. Bang, straight down again, real momentum here, strong red candles. Really significant sell-off now here, guys, as we come up to trade number 9, so be careful catching a falling sword in these markets. Trade number 9, the time is 3:45, the price is all the way down now at 1121.50. Okay, it's 3:45 and just 20 minutes after the previous trade, we're trading all the way down 1121.50. If you sold 20 contracts 20 minutes ago, then you would have nailed over $5,000 in profit in 20 minutes. Great trading. If you first shorted 20 contracts when you read my email about readjusting Goldman Sachs' earnings per share data, you would now have $16,000 in profit. Okay. Now Will's just posted this comment into the Hotcom room. Market talk that Ben Bernanke will not get re-elected as chairman of the Federal Reserve. Warren Buffett, I'm sure you all know Warren Buffett. Warren Buffett said yesterday that the market would tank if Ben Bernanke did not get re-elected. Bernanke is the chairman of the Federal Reserve, and as you know, Buffett is one of the most successful investors in history. Okay, so think about that news, guys. Think about what it might mean for the S&P. We're trading at 1121.50. Have a look at the chart. You've got 60 seconds. Would you like to trade? Okay, so it's been quite a significant session so far. That was trade number 9. Let's see how the market now moved after those market talks. We're just slightly sideways, and then once again more pressure coming in. More selling pressure coming in the S&P. Be very hard to hold longs along here, and we're now trading at 11.17. We're now trading at... Okay, the time is 4:35. This is your trade number 10. The price is 11.17. It's 4:35, and Obama is on TV giving a speech to announce a proposal on banks. So the proposals would place new limits on liabilities at the largest firms. Obama wanted to end the mentality of the too big to fail concept within the financial markets. Okay, he seeks new limits on house trading size and risk undertaking by banks. So this is quite an aggressive stance Obama is taking against the financial institutions, and perhaps this is a populist reaction to the credit crunch and the crisis that we saw 2007, 2008. What you have to decide now, is this just Obama making a big stance? Just recently, actually, before he made this speech, 3 days before this market activity, the Democrats lost a really important seat. So is this Obama just giving lip service to those in Main Street who feel like they've been let down by Wall Street? Would Congress even pass such a plan? After such a hectic day of trading, you've made up your mind to call it a day within 10 minutes, okay? So your last opportunity to trade before closing out your positions in 10 minutes time. The current market price is 11.17. Are we now oversold? or can the market possibly go lower from here? Have a look at the chart. Think about the market activity that you've seen so far. You're going to be in this trade for 10 minutes. This is your last trade. The price is 11.17. Would you like to trade? Okay, so let's have a look at how the market reacted after that, and off the screen. Having to adjust my screen here to show the even new lows as we come to the last price, and the last price here is 11.1175, 11.1175, and this is the price, guys, you have to take as your closing price. This is the price I'm going to close you all out of your positions. Amazingly, if you have a look at the longer term chart here, you can see, look at the size of this red candle today for the price that you've traded. Wow. We're now just one point above the 2009 closing price of 11.1075. So in just 2 days here, including the day that you've just traded, we've wiped out the whole of the year's activity so far. Just share your experiences here on a trading game recap, and you can sort of review how you managed yourself through this session. So here you can see early on we first had the Goldman Sachs results, and if you remember, these results came out 8.2 earnings per share versus 5.14 expected. Really good results out of Goldman Sachs, and initially we pushed higher. But then Goldman Sachs put a caveat to those results, saying, their compensation was at the lowest levels recorded. So market uncertainty here. We then pushed on, and your next major piece of economic data was US initial jobless claims, and those jobless claims came out much higher than expected. Bad economic data for the US economy. And the market pushed down to the low of the morning's range. However, when that data came out, if you guys remember, there was a note that came with that data saying the claims jump is administrative. Okay, so not necessarily bad data, but because of the way that they were counting the data, it looked worse than it was. So as the market pushed through and we got through the US cash open, we actually went pretty much to the top of the day's range here. Okay, so after that email on Goldman Sachs, then we start to pull lower, but it's not until 3 p.m. We're still really within the range here, but it's not until the 3 p.m. data has come out, and it was mixed data. It wasn't necessarily negative, it was mixed, but it's not until that had been breached then the market really started to move and gain momentum. Okay, so breakout of key technical levels, and this is why some of these moves can be self-fulfilling. When you break these technical levels, then we had more bad news, Bernanke election rumours, and then Obama attacked the bank. So huge day there, guys. I hope you enjoyed trading it. So if you are doing this through the Google Doc sheet, let me now work out the scores and send them to you.